back, guys. It's been a long time since I posted a YouTube video, and I've been working, I've been back testing, and just trying to get better so that I can come back and give you all nuggets for free. And this week on Thursday, I caught a BTCUSD trade. So we are going to go. Um, let's review the trade together, rather, and so that you will see what I saw and why I took the trade and how I took the trade. So when I came to the chart, although it's in hindsight, I don't use the replay button because when I was learning I didn't use the replay button, so you know it's kind of weird doing it. So let's go through the trade. So this should be I think around here. So now what I saw was, the first thing I saw was this low here. See this bearish run and then this bullish move into this fair value gap, into this fair value gap, into this fair value gap. Although this fair value gap is not really necessary, I don't really consider it, but the reason why I took it into consideration was because this market traded into this fair value gap and closed it. Now I'll make reference to that later. So what I'm really concerned about is this bearish candle and this bullish candle. These two candles have formed the low on the 4-hour time frame. These two candles form the low on the 4-hour time frame. Why I said they form the low on the 4-hour time frame is because, okay, let's mark it out and see something. This is let's take the exact numbers and so we'll be precise. 6717.0, 67 7 6717. Now this is the low here. This bearish candle and this bullish candle has formed the low. You can switch to the line charts to see it. Now this is that low here. Switch back to the candlestick. So why is it low on the 4-hour time frame is because when you go to the daily time frame, this low disappears. It's no longer here. So you see this low disappears. It's no longer here, and so that's why I say it formed the low on the 4-hour time frame. The low is not existent only on the 4-hour, but the 4-hour, because I go from the daily to the 4-hour to the 1-hour to the 15 minutes to the 5 minutes, 3 and 1. Sometimes I start from the monthly, weekly, daily, so just like that. So but if you go to the 1-hour, you will still see the low. But why we are taking the 4-hour is because personally for me, this low, the highest time frame that has this low is the 4-hour, because if you go to the daily, if you go to the weekly, you would not see that low. So that's why I took it on the 4-hour. So this is a 4-hour low. So what I do next is I wait for a 4-hour candle to close or trade below. Sorry. I wait for a 4-hour candle to trade or close below, but the 4-hour candle has to close first. It doesn't have to close under, it just has to trade under to grab the liquidity under the low. Now this candle did that. This next 4-hour candle traded below but did not close below, so you can see it here. So I will see this as an external range liquidity below this low. Now if you look to this side, what do you see here? There's a fair value gap here also, which gives me more confluence that we will be looking for a long setup. This fair value gap here, or imbalance, whatever you want to call it. So once I've seen this, let me extend. I like to be specific with price. I don't just draw the lines. I have to, get the exact points, the opening, the closing, and all of that. So once I've gotten that, now this is the low. I've already explained why this low is here and why I feel this low is important. Now, if this fair value gap hadn't been covered by this trade up, now I will be taking this fair value gap as an internal range liquidity. But for the fact that before the low formed, it has been covered, so it's no longer valid. Now I have to look for, because price has gone to an external range liquidity, sorry. Now we have to look for an internal range liquidity. Now if you look on this 4-hour, there is actually nothing here, or from this leg there's actually nothing here. So we'll go down to the 1-hour time frame to look for something inside. Now we'll come down to the 1-hour time frame. That is after the 4-hour candle has closed. After this candle has closed, it has to close first before we take any action. So we go down to the 1-hour. Now on the 1-hour, this is what we saw. Here. I think this is the close of that candle, a 4-hour candle. This is the beginning of a new 4-hour candle on this line here. So this is the close of that 4-hour candle. So on the close of that 4-hour candle, there is a fair value gap here. There is a fair value gap here on the 1-hour. So now we've seen a fair value gap, and this is coming from a fair value gap after going for this external range liquidity. So it is more logical that when price trades into this fair value gap, it's more likely to continue going down. But what did we see here? Price traded into that fair value gap. Now anything can happen here. It can continue going down. It can decide to balance that fair value gap or balance the imbalance. Now, how do we know what to do? How do we know if it's going to balance or continue trading down? Now what I will do next is, now I've gotten what I'm looking for on the 1-hour. I've gotten what I'm looking for on the 4-hour. Now I've gotten what I'm looking for on the 1-hour. So the next thing I will do is I'll go down to the 15 minutes time frame. Now on the 15 minutes time frame, this way it gets interesting. On the 15 minutes time frame, this market has traded into this fair value gap already on the 1-hour. So on the 15 minutes now, we're looking for a trend, kind of, looking for break of structure, market structure shift, and all of that. So if we get any, we'll be going for the trade. Now here is where it gets a little bit confusing. Now this is a trend on the 15 minutes. Now this price has traded below this low. When I'm looking for this kind of setups, if I want to see a break of structure, I just want to see market trade below the previous low. It doesn't have to close below it. It doesn't have to close below it. But when I'm looking for an entry, it has to close below. Now, here's what I'm saying. So this low was broken here. This low, price went below it here, although it closed back inside, but formed a new high. Let me zoom in a bit. Formed a new high here on the 15 minutes. This is a bullish candle and a bearish candle. So this is a high. These two candles, 1, 2, this bullish candle and this bearish candle, formed this high. So this is a high. This one and this one, if you switch to the line chart, you still see it. This is the high here. If you switch back to the candles, this is the high. So when I got this, and now I'm looking for the market to close. That was why I said when I'm looking for an entry, I need the market to close strongly above, a high or low, But when I'm looking for stuffs like this, it doesn't have to close below. I know this. That's why I said it's going to get a little bit confusing here. So in this case now, let me go back again. Let me delete this. This low was traded below by this candle, but did not close below. So I will take it as a valid break of structure because it traded into this fair value gap. Valid break of structure. Now, why it came back up and closed and did not close below here is because of this 4-hour fair value gap. Now, when it has come here, when it has come back up and formed this high, now this is a new high. When this high is being closed above, I will see that as a market structure shift. Now we've changed from bearish to bullish market structure shift on the 15 minutes time frame. So when I got this shift here, when this candle closed above, when I got this shift here, now the next thing I was looking for is where did the market, where was the push, where did the push that changed, that moved market structure from bearish to bullish, where did it start from? Now this is the last bearish candle. This is the last bearish candle before this push that changed market structure. So we'll change it to the 15 minutes color. So this is the last, this is the last bearish candle before this push and traded into the fair value gap. Now another thing, we are still waiting to know if this is going to continue lower or is going to continue higher, although this is hindsight, but just get what I'm trying to say. So when the market came back into this other block, I call it another block. When the market came back into this other block, although all of this has happened as the 4-hour candle closed, all of this has happened, but it doesn't mean as long as it aligns with the principles and rules of the strategy. So this is the push here, and this is the retracement back into the other block, by this bearish candle. So now the 15 minutes has given us what we want. Now we have to go to the 5 minutes. I have to go to the 5 minutes. Yeah. So now this is the retracement into that other block. This is the retracement into that other block on the 5 minutes. Yeah. So this is the retracement. Now there is a downtrend here, if you notice. So when we got this downtrend on the 5 minutes, got this downtrend on the 5 minutes. Now what I'm waiting for is, for another market structure shift on this 5 minutes. It's that simple. What I'm waiting for is another market structure shift on this 5 minutes to confirm we're going bullish. Now here we got that market structure shift here with this bullish candle, this one here. So when I got that, I had an entry here, sorry, this other block, I had an entry here, but price didn't come back below. So what I normally do is, once I get my displacement, I normally take the trade, and my stop loss is always below my order block. Now I normally take the trade, and my take profit is at the end. My final take profit is at the end of the fair value gap, or the imbalance that has to be covered. So this was where I took the trade around, although I had my bigger entry here, but I took some entries here too, around here. So yeah, this is it, and you can see how the trade ended up profits. And although my first take profit, I always check 50% of the fair value gap. That should be my first take profit around here, and the second take profit around here. So that's how I get almost all my trades, and with this concept and fair value gaps. Fair value gaps are really powerful, and if you put them in context, and you can get a lot of good trades out of them. And yeah, that is it. And I hope I hope you learned something from this video. And I know it's a bit confusing, and with time, if you watch it over and over again, you might get some fresh things or new things every time you watch it. So I'll advise you don't just scroll and binge watch and try to fast forward it or something. This is a learning process, and you don't have to rush it. And so that's just it, guys. I'm glad to be back to YouTube and posting this video for you guys. Do have a wonderful weekend. Thank you.